AVV Nation, all of YouTube, what's going on? My name is Patrick France, Senior Instructor here at VectorVest, and today I'm bringing you a much requested video. And for good reason as well. With the rise at the pump that we've seen over the last year or so, also with the fact that a lot of major auto manufacturers are now setting their goals to go all electric over the course of the next decade, these stocks have a lot of potential to rise and a lot of potential to make you some good money. That's right, we're going to be taking a look at lithium stocks. If a lot of these manufacturers need to make their full production line electric by the next decade, then they're going to need lithium to make the batteries that go into these electric vehicles. And so lithium stocks really seem set to rise and win during this time frame. So I've got a list of stocks here today, and we're going to take a look at some of the ones that are already making headlines. We'll take a look at those headlines, and then we'll dive into the VectorVest software and do our rank analysis to find the best ones that suit you. So if you're ready to check these stocks out, as always, smash that like button, subscribe if you're not already subscribed, and let's get right into it here today. All right, welcome back. So we're going to start off with some of the news or the headlines that a couple of these stocks have been making lately. First one is more of a speculative stock, and that is SGML, as you can see right above me, right over there. And this is because this stock really hasn't started generating any revenue. It's still a very early stage company, but as we get into, they're making the right moves. So let's go ahead, take a look at the article real quick. So Sigma Lithium has been soaring over 254% over the last year. No surprise there, as more companies announce that they're going all electric over the next decade. You could expect to see even the worst performers or even some of the more speculative stocks do extremely well as long as they're in that same sphere, if you will. And that's because all boats rise with the tide and all boats fall with the tide. But one of the reasons this article goes into that they're seeing such a big explosion in their price action is even though that they aren't really generating any revenue quite yet, they look at their cash burn and they look at their cash flow, and things look bright for this one. So if we come down here, it talks about cash runway. And what is cash runway? Basically, cash runway is looking at the amount of money the company has on hand plus their annual cash burn that they're going through. So right now, Sigma Lithium has roughly $141 million in cash on hand, and their burn rate is about $33 million every year, or over the last 12 months at least for this article. So therefore, it gives them a cash runway of about a little over 4 years from March of 2022. So they have, even if they keep this up without generating any revenue, they have at least 4 years of cash on hand to be able to continue to operate and get their business started. Well, we scroll down here. Some of the other interesting aspects that it talks about is looking at their cash burn and change over time. Well, their cash burn is increasing by roughly 380% over the last year, but that's to be expected. As companies get ready to go commercial, you tend to see them ramping up their spending, which would increase their cash burn. So no surprise with that. The next area that they look at is how hard would it be for Sigma Lithium to raise more cash for growth as well. And so when coming down, taking a look at it, once again, their cash burn rate was roughly about $33 million per last year over the last 12 months, and their market cap is $2.3 billion. So that cash burn equates to about 1.5% of its market value. So therefore, if they need to sell more shares out on the market and dilute a little bit, it wouldn't be a huge dilution, and they could easily continue to have enough cash on hand for at least another year added onto the already 4-year cash runway that we see. And then later on in the article, they talk about why they're not really worried about their cash burn rate. It goes into the fact that the cash burn rate is at a stable level and that it's not getting out of hand. And so therefore, they seem to be making the right business decisions and being able to appropriately manage that money so that way it's getting used as effectively as possible. So therefore, good management decisions essentially. So this is one stock that we'll take a look at here in a few moments, but that comes in as more of that speculative play out of the lithium field. The next article we have for you today is about Albemarle, ALB, which is up 43% in the last 3 months. And it talks about what's driving that run here. Well, over the last 3 months, the stock once again has gone up 43%, and that beats the industry's standard or industry's average so far of about 13%. If we dive into why it's doing so well, it really talks about the growth and the earnings of the stock, or how much money the company is generating. And as we always say here at VectorVest, earnings is the engine that drives stock prices higher over time. And this company seems to have what it takes to get the job done. So it talks about their earnings performance that they had recently in their first quarter of 2022. Well, Albemarle's adjusted earnings came in at $2.38 per share, which topped estimates of $1.73 per share. So grossly outperforming the estimates that they were expecting. On top of that, they also gave some positive forward guidance as well. The company envisions net sales for 2020 to be between $5.2 billion and $5.6 billion, up from $4.2 to $4.5 billion. So an upward revision is definitely a positive sign that shows the stock is growing and the company's doing the right thing here. And then as we scroll down a little bit more, talking about the full year projections. So the company sees adjusted earnings per share for 2022 in the band of 9.25 to 12.25, up from 5.65 to 6.65 expected earlier. So that's a huge increase in their expected overall earnings per share by the end of 2022. So a company that's not only showing that fact that they can make money, but also increasing their projections to show that they have a lot of faith in their company, that they're going to continue to make money and make more money than they were even expecting to at the beginning of the year, is definitely a strong sign. So now that we've covered that, let's go ahead, dive into the VectorVest 7 software and start to break down the list of stocks that we have here for you today. So I'll go ahead, get out of here and jump right into the VectorVest software. And now, as you can see, we've got 15 stocks from the lithium industry. And looking at them here, if you want to take a second, pause the video, write them down, you can put them into your own VectorVest 7 watch list. And if you're not already a VectorVest 7 subscriber or a VectorVest subscriber in general, click on the link down in the description of today's video and sign up for the 99-cent trial and put the power of VectorVest on your side now. So when looking at it, as always, VectorVest does a lot of the legwork for you right out of the gate. So whenever you build a watch list inside of VectorVest, it'll automatically bring the best performers to the top of the list and the worst performers to the bottom. So while we can see ALB is in the top 3, we look and we see SGML is in the top 50. There are some worse performers down here as well that we can look at, but really, whenever you're going to be looking for which ones you should be investing in, you should always look more towards the top of the list and really looking at stocks with a VST above the level of 1, also making sure their RT is above the level of 1. And we'll cover what those mean in just a second. So whenever you have a list here, you get some basic information starting from the left and we'll work our way to the right. So as always, we start off with the basics like the company's name, the symbol, the exchange, the price, dollar change, percent price change, bid and ask, standard information you can find in any broker account. But then we come to the value, and the value is where we really start to see the power of VectorVest that you're not going to be able to find anywhere else. The value is what we currently feel the stock is worth, and the way we use the value is we compare the price of the stock to its value. So for SQM, for example, the price is pretty much right at its value. So we would consider that to be fairly valued, meaning that you're paying what the stock should be worth right now. Now, typically VectorVest advocates buying undervalued stocks. So therefore we want to see the price of the stock below its value, which would indicate you're getting a discount. But just because a stock has a price that's above its value, meaning it's overvalued, doesn't necessarily mean it's a bad thing. It just says that you're paying a premium currently for that stock. So That's where we get to the value, and this is how you can start to see if you're getting a bargain or not, essentially. After the value though, the next four indicators, the RV, RS, RT, and VST, are all going to be cast on a scale of 0 to 2, and above 1 is good and below 1 is bad. That's as hard as you need to make it. So the RV is looking at the long-term potential of stock. So for example, SQM, RV is above 1, tells us this stock has good long-term potential over the next 1 to 3 years. The next indicator is the RS, or relative safety. Basically, it's looking at the amount of risk involved in the stock compared to the average stock out there. Well, since lithium hasn't really taken off quite yet and it's still in its early infancy stages, you could expect to see a lot of these stocks have an RS rating below that level of 1 because it is a little bit riskier because they don't have that proven track record of, growing their earnings quarter over quarter, year over year for many, many years in a row like you've seen with some other stocks in the market. So once again, this is a little bit more of an aggressive play with the majority of these lithium stocks. And then the third is the RT, or relative timing. The relative timing is looking at that short-term price trend. Now, since it's on a scaling of 0 to 2, if it's above 1, that tells us the stock is in a short-term uptrend. And if it's below 1, that tells us the stock is in a short-term downtrend. Now, these are stocks we're not saying, hey, jump on board right now, because we understand what's going on with the overall market, and the markets have been falling. So therefore, as always, with VectorVest, we tell you when to buy and when not to buy. And if you're not familiar with that, once again, sign up for the trial and put it to the test. You can see when you should be getting in and when you should not be getting in. Because right now, these are stocks you should be adding to your radar and keeping in a watch list so that way you can monitor them going forward and waiting for that right opportunity to buy into them. So we look at the RT. A lot of these stocks do have RTs below the level of 1. No surprise. The markets have been going down, and no matter what, even the best stocks can go down in a down market. So then the combination of the RV, RS, and RT get combined into what we like to call our master indicator, VST, standing for value, safety, and timing, or that VST vector. And this is something unique you're not going to be able to find anywhere else because it's a combination of both fundamental and technical information all summarized into one, whereas most places out there just give you one or the other. So it's a great blend of both, so that way you can get a better overall sense of what's going on in the stock and gives you more usable information rather than just scads of data that you have to go analyze on your own. So then when looking at it, always look at, once again, for stocks with a VST greater than 1. So therefore, anything from GNENF all the way up to SQM. If you're going to be starting right now, and that's saying, if we had a buy opportunity right now in the market, this is where you'd want to start off with. Now, by the time the market starts recovering a little bit and, we see the market conditions improving, maybe we'll see some of these others start to pick back up and have a VST rating greater than 1. But for right now, they don't quite have that. So once again, just kind of confirming what our overall market timing has been telling our subscribers for many, many months now. So when looking at it, this is how easy VectorVest can make it. If you're looking for the best potential or long-term potential play, so the more aggressive, not really worried about the current fundamentals, just looking for the one that has the best long-term potential over the next 1 to 3 years, well, all you have to do is simply click on RV and it'll automatically bring the best potential candidate to the top of the list. So therefore, PILBF, which is a pink sheet stock. So be careful of that. If you're not comfortable with it, simply move on to the next one, which would be SQM, which was our top VSC stock just a moment ago. Now, if you're somebody looking for more consistency, more fundamentally sound, some safer stock, if you will, then all you got to do is click on RS and resort it by relative safety, because that's looking for the best fundamentals here. So therefore, ALB, the one we just talked about, no surprise, we're seeing them growing their earnings, outperforming their estimates, and even revising upwards their estimates. So therefore, yeah, the fundamentals look pretty strong here with ALB. And then if you notice, all the other stocks in the list have a RS well below that level of 1 or below 1 overall. So therefore, if you're looking for fundamentals on one of these lithium stocks, ALB is that clear winner. And then last but not least, if you're somebody looking for momentum or looking for, which is the hottest stock in this industry so far, well, all you got to do is sort by RT. RT, once again, is looking at that short-term price trend. So since they're on a scaling of 0 to 2, above 1 the closer to 2 it is, the stronger the uptrend. Well, markets haven't been doing that great, but there's still a few stocks in the lithium industry that have still been able to maintain and continue to move higher. More specifically, GNENF. Once again, it's a pink sheet, but it's still doing extremely well, and it's fairly valued, slightly undervalued, if you will. So now that we've covered that, we've seen a few good opportunities. Hopefully we've covered which stocks could potentially suit you depending on your own investment style. Let's go ahead and take a look at the graph of SQM, since that was our top performer based off VST. We'll look at ALB and then SGML, since that was our other one we found the article about. So we'll head and right click and just go view the stock graphs. And now we've got SQM up here, our very first one. As we can see at the very top, we have the buy, hold, and sell rating bar that you can find on any stock out there, and shows the transition that VectorVest gives a buy, hold, and sell rating on of any stock out there. And then we see the price shown in candlesticks. We have a 3 and 8 exponential moving average around price. And then below there, I have the MACD, DPO, which are 2 technical indicators, and then volume as well at the very bottom. So what I'm going to do is I'm going to zoom in to a 3-month time frame to get a closer look at what's currently going on. And then I'll simply remove the DPO for now and just keep on MACD, since MACD is more of that common indicator that a lot of people are familiar with. So with looking at SQM, as we can see, it's been on a nice steady uptrend from bottom left to upper right. Basically what you want to see when looking for good winning candidates. But on a short-term basis, since that high back around the end of May, it has been pulling back. The 3 and the 8 are negative. The MACD is also heading south. On a short-term basis, it is also negative. So therefore, on a short-term time frame, this stock is in a short-term decline. So therefore, if you're wanting to add some of these stocks to your portfolio, wait for some of these key indicators like the 3 and the 8 to turn positive, or the MACD to turn positive as well, to give you signs that that momentum is shifting from down back to up. So SQM though is looking pretty strong. You had a doji as of yesterday showing some indecision, which could possibly lead to a reversal, and getting a little bit of an uptick as we can see right now. If we moved on to the next one, ALB, this one has great fundamentals as we've talked about just a little bit ago. Price action, nice steady rise from bottom left to upper right. But just like we were seeing with SQM, it is on a short-term pullback, and MACD is negative, 3 and the 8 are negative. Volume had a pretty big down day yesterday on some stronger volume. So therefore, we may see some continued selling pressure as the market continues to sell off, but one to keep on your radar and look for that reversal sign to take advantage of. Also, using that with a combination of our market timing will greatly increase your probability of success in any one of these. And then last but not least, taking a look at SGML. SGML is more of that speculative play as we discussed earlier, and looking at the price action, a little bit choppier than what we saw with the first two. Whereas, it is higher on a 3-month basis. For the most part of the 3 months, it has been moving sideways. So therefore, creating a tight channel. And if you're looking to jump on board with a more speculative but potentially higher reward play, wait for the breakout from this sideways move. To demonstrate that, I'll use the horizontal line from the upper left and go ahead and put the upper bound on here. So therefore, the upper bound sits roughly around 1865. If we can see price action break above that point and get follow through, that would be that strong inclination or strong sign that you're looking for, that the uptrend is now continuing. This sideways move is done and a new uptrend is starting to form. So therefore, those are 3 different ideas for you guys out there, and a few other ideas that we looked at a second ago to help, no matter what style of investor you are, help you find a play out of the lithium field that you can make money in. So as always, let me know your thoughts down in the comments below. If there's a stock in this list that I didn't mention or that wasn't in the list, let me know in the comments, and I'd be glad to do an update on adding that into the list and seeing how that compares to the stocks that we already have in here. So once again, as always, it's been my pleasure being with you guys. Hopefully you found today's video useful. If you did, share this with all your friends, share this with all your family, and until next time, toodles.
Yeah.